Welcome to Breaking Banks. I'm your host, Brett King, and this week we have the return of our partners at Plaid, and they brought along their friends from Experian. And some interesting things are sort of happening in the lead up to sort of the world of agentic AI and so forth. One of the things that's really interesting in this space right now is as we look at the next generation of generative finance, a lot of what we're talking about, whether it's smart contracts or GenFi or these sort of things, is going to require a new way of us thinking about data. And so this is sort of the theme of this collaboration that's come about between Plaid and Experian in terms of using data to get a better view of customer behavior, looking at credit risk in particular. So what we're really going to get into today is looking at how this market is changing, how data access is driving the demand for open banking, regardless of whatever the regulations are in place. And we've got the team here to talk about it today. So let me introduce you to the two speakers that we're going to be speaking to today. We have Michelle Young, who's the credit product lead at Plaid. She builds products that leverage cash flow data to expand responsible credit access. And, we're obviously Plaid products like this are used by SoFi, Zillow Home Loans, BMG, Affirm, and others. Prior to Plaid, Michelle was at head of lending product at Figure and worked in risk at SoFi and did some work with EY. Also have Ashley Knight joining us. She is the SVP of Product Management at Experian. She leads the product management team for financial services and data business with a focus on these sort of alternative data relationships, alternative data credit scores, open banking, and so forth. And she fosters innovation and drives financial inclusion and likes to do that by using this new data. So Michelle and Ashley, welcome to Breaking Banks.
Thanks, Brett.
So let's start with this collaboration before we start talking about some of the particulars, particularly in terms of cash flow insights and so forth. But how did this start off? Because both of you are fairly senior players in the market. Typically, when we look at these types of collaborations, it takes a fair bit of time, because you're both fairly well developed in the market. So how did this sort of natural collaboration come about?
This collaboration started because open banking has been on the rise, and it's not new to most of us. It's been out in the wild for many years now, but in terms of use of this data for credit decisioning, that's what's starting to emerge more. And so as Experian has embarked on offering open banking solutions for the purposes of decisioning as part of credit underwriting and such, what we found was that clients, lenders, et cetera, are super interested in this data and they want to start using it. However, they face challenges around how do I access the data and how do I get consent to use the data? And so that's where Experian started to assess different partnerships in the market. And Plaid obviously rose to the top because of their capabilities.
Yeah. Michelle?
Yeah. Look, I think as Ashley mentioned, we are a market leader within the open banking data. And the thing that I am so proud of is just the relationship that we've built with consumers and facilitating sharing of bank data information. As this has evolved over the last kind of decade and kind of the comfort for consumers to share this for different use cases, we've really seen an opportunity to have this data be leveraged, as you mentioned at the top of this, for credit risk and underwriting and access to, new types of loan products. And so as we've really focused on the consumer relationship, we've also thought about how we develop relationships with other customers in the space or lenders using this data. And, I think we bring that open banking expertise, the conversion expertise, and how consumers really share this data. But working with a partner like Experian allows us the opportunity to really expand the types of lenders that will be able to access this data, between, their expertise in the credit space and our expertise within the open banking space and really cash flow specifically. It's really a great partnership that I think is really differentiated in the market.
So I want to get into the cash flow stuff, obviously, and I want to talk about, how it can be used and also give some insights from the work I've seen, globally where we see cash flow utilization. But before I get to that, the other thing that sort of occurred to me in the prep for the show is that there's something also different happening right now experientially in the credit business, in financial services, where there is an expectation because of mobile and because of buy now, pay later and so forth, that there needs to be real-time credit decisioning. So if you have a process internally in a bank or in a lender where you have to request paperwork off a customer to be able to analyze their credit risk, you're already essentially got a data risk in terms of protecting, the moat for your business as a lender. Because everything we see right now, whether it is, as I said, it's sort of contextualized lending like BNPL, or whether we look at agentic AI and its role potentially in lending moving forward, you're going to have that real-time analysis. Would you guys agree that, a large part of this data requirement is that, moving forward, credit risk and credit decisioning is going to be in the domain of real time, and therefore you need the data? Is that a safe assumption? Michelle, you want to kick us off?
Yeah, I'm happy to. 100%. I'm laughing at you saying, paper documents. I don't even know if paper bank statements even exist anymore in the world that we're living in.
Right?
Yeah. It's like when you set up everything, it's like digital statements, and then they email you over and over again to make sure you do digital. So I think that just goes to show the world that we live in is so much different than I think the world that was set up when some of these traditional credit products in place. And for the record, I think that those do have benefit in terms of the measuring the willingness to repay. I think that as we look at cash flow data in general, it's the ability to pay. And I think that the piece that you talked about is the market is innovating so quickly. There are new products all the time coming up, and especially with the emergence of fintech. If you think about credit builder applications and products in that space, if you think about buy now, pay later, which you mentioned, these are different tools that do show up in real-time data. And so the value of having that is that snapshot that is actually able to keep up with the innovation in the market and ensure that you can continually update your credit risk and your understanding of that consumer's really ability to repay this loan from a credit risk perspective, because that data is real time.
Absolutely. And I think, Ashley, you guys would agree that, you see that, as your business has expanded, the credit score is at the heart of what you guys do, but it's not all of what you do. There's a whole bunch of other data that you've been specializing in building on, right?
Yes, absolutely. There's so much more data that has a wealth of information that goes beyond credit and really helps to complement the overarching view of a consumer's ability and willingness to pay. And so that additional data is hugely valuable to the companies we work with. And that's where open banking and consumer permission data becomes even more important, especially as we go forward, because we truly believe this is going to be the future of scoring, where where lenders start combining credit data, alternative data, such as consumer permissioned. Buy now, pay later is obviously top of mind, and getting more transparency into that data overall, in addition to other data metrics that clients are looking for to better assess risk. To emphasize there too, that is so important, because there can be no latency, and having the freshest data delivered as fast as possible is extremely important to lenders in terms of their application flows and pull through, et cetera.
So I don't know whether you guys heard this stat, but this is a really, just to sort of show how behavioral lending is and what the psychology is behind this. But I heard this stat out of again, it's a Chinese market. And, we talked about Chinese market in the lead up to this, but there was a really amazing stat from, I think it was WeChat Pay and some of the lending stuff that they were doing, that someone who keeps their phone charged correlates with a much lower risk of lending default. just a really simple data point, right? But, I remember, I had Scott Sanborn on from Lending Club, and he came up with a data point. He said, what is the best predictor of default risk for us? He said it was whether someone pays their mobile phone bill on time.
Mm-hmm.
Right. So there are other sources of data that really are useful here. But how does this additional data for lenders in particular, how is that opening up the market in terms of lending? Is it changing approvals? I mean, I'm not just talking about default risk, but does it mean more people are now getting access to credit as a result of this?
It does. It does. In the analytics that we've run, we've seen there can be as much as a 30% increase in application approvals for those that use open banking data. And that just means so much more opportunity for consumers as well as lenders. And keep in mind, too, that's not changing risk tolerance. That's maintaining existing thresholds, but just approving more consumers with this bank account information. And so most of the use cases, because we're really talking about benefit, right, and return for lenders to use this data, most of the use cases initially that lenders are starting to look at is leveraging this for underwriting specifically to expand their lending universe, score more consumers, really target the thin file population, which is consumers who don't have a lot of credit. And that could be someone who just graduated from college, right? We've all been there, right? We haven't had a first credit card yet, and we signed up for one on campus as they were promoting.
Try being an immigrant and building a thin credit file. Let me tell you about that. Yeah.
Right, exactly. And so that's where cash flow and open banking data is so important, and what lenders are starting to look at in terms of I can better assess a consumer not just by one piece of information. I can go even further and approve more applications and maintain my existing risk tolerance. And we know there's so many consumers that don't have access to mainstream credit. 100 million Americans do not. And so that just further reinforces why this is so important and how it benefits lenders and consumers alike. I'd also add too, just that, that's one example of how cash flow and open banking data can benefit banks. But there's so much more around leveraging this data to assess potential risks or opportunities with an existing portfolio. So if you think about banks that have an existing deposits portfolio, right, leveraging open banking technology to assess opportunities within that portfolio is another area where organizations are starting to see opportunity to leverage this data for upsell, cross-sell.
Yeah. Which I think the exciting part is it all comes down to, different use cases from a lender's perspective. I think there's this broad impact that we all know. And I think cash flow in general has been talked about, around how this can really develop and change the industry. It all comes down to you as a lender. Where do you want to get started? You want to look at populations where you gave them an interest rate and maybe they didn't take the loan. Could you be giving them a better interest rate because you have a better idea of that risk of that borrower? And then all the way through the full lender life cycle, and not thinking about it as a point in time solution, but as a lender thinking about the broad impact. What we've talked about with customers is that account line management on the credit card side, on the servicing use case that Ashley talked about. Don't we all hate going into your credit card and getting the prompt that's like, has your income been updated? Like, what if the credit card company knew your income was updated and then adjusted your credit line because of that, because it can be proactive? And so we're just excited to see that, the value is broad, but it all comes down to the experience and how a lender actually brings that into the process and rolls it out to a customer.
I think we've learned a great deal about data models and the role they have to play in managing risk over the last decade or so, as fintechs have come into the market and sort of taken these more creative approaches. I know I talked with you guys about a couple of examples of that, Nubank in Latin America, where they've had, with their credit card rates, 30% lower delinquency rates than the rest of the market there. Primarily, I think that's because of cash flow data. And another great example out of China is with Alipay's Ant my bank's SME lending portfolio. And I mean, this is considerable. We're talking about 60 million SME businesses annually they lend to. They have 40% of the SME lending market there. And that's driven in large part because they have this platform ecosystem around Alibaba and other, merchant platforming services like that. But their NPL ratios are half of the big banks in terms of lending, because their ability to know that platform and wallet-based cash flow data gives them a huge data advantage in being able to anticipate risk. And I think that's where it's really important particularly for first-time credit usage. If you don't have a credit score, if you've got a thin credit file, it doesn't necessarily mean you're a bad lender. The cash flow data could tell us you choose not to use credit because you manage your money very well. That should give us, and if we see you manage your money well, then that reduces risk. So I do see a real demand for this sort of behavioral data sets in terms of this. In terms of AI, I want to get into the tech a little bit, but in terms of AI and how you guys see that develop, what do you think beyond this cash flow data? What sort of other data sources might you guys be looking at to augment, credit decision making and understanding customers better? What about you, Michelle? What are you guys thinking about?
Yeah. I mean, I think like you hit on that point of the behavior. So if you think about like within cash flow, the pieces that you're looking at is the behavior of how you manage your money. I think the thing that we also find very interesting is like the behavior of what is happening with that account that you connect. And so how do you think about, I am connecting an account for a credit card. Where else am I connecting that account? Am I also connecting that account from an open banking perspective to a personal financial management app because I really care about managing my money, or a wealth management app because I'm actually trying to invest in my future? Those are all positive indicators of a behavior that would result or impact credit over time. And that is something that we continue to invest in. How did those other multidimensional data points actually really drive the impact or correlated or predictive of credit risk? I think the point that I want to hit on is you've talked about credit and kind of credit in general as this thing around traditional scores, and then we're talking about cash flow. In the end of the day, drivers Lending Club, who you mentioned, and others, they're innovators in this space because everything they look at is multidimensional. It's not single source data. And I think that's where, especially on an unsecured loans, that's where you really can become competitive as a lender to really access these different data points that you're not seeing today.
Mm-hmm.
Absolutely.
Yeah. I would completely agree with that, Michelle. And I think open banking is just the starting point. And it's going to very quickly move to open finance and an open data ecosystem where the key component is still the consumer in control of their data, and they share it. They are empowered to share it with who they choose to in a secure manner. And so it's open banking today. In the future, they'll have the power to share whatever data they want. And so when we think about going forward and what other data will want to empower the consumers to share, it is more around employment and pensions and wealth information, all of this that shows more information about a consumer's financial profile overall. But I think going broader, I know we're talking about lending and bank data specifically, but I do think it's going to be just open data, right? So I can share with you.
Yeah. Health data is going to be big. Yeah, absolutely. Identity. Yeah.
Exactly.
If you want to start coding your own LLM, think about the data you're going to have to share. If you want to personalize your AI to integrate into your life better, think about the sort of data you're going to have to share for that. I think we're moving into a very different era when it comes to that stuff. Let me ask you about the technology a little bit. I hope you guys are okay to sort of dive in the weeds a bit. But if I'm a bank, or a lender, and I want to get access to this type of data, help me understand what sort of technical agility am I going to need? What's the, how complex it is to sort of build this into my decisioning matrix? And do you think that this sort of speaks to technology architecture moving forward that's going to have this sort of flexibility. Maybe you can kick us off, Ashley.
Yeah. Yeah, absolutely. So I'll let Michelle speak to the actual design of the integration component with the consumer. But what we've built with Plaid is very streamlined connectivity with two connections through APIs so that the data can seamlessly be shared from the consumer at the time of application. And then that information is shared with Experian. Experian takes that information and we categorize it and we deliver back directly to the lender a cash flow attributes or a cash flow score, depending on what they choose. And then they can leverage that information to make a credit decision across a variety of use cases. So credit cards, personal loans, automotive, mortgage. And the way that we're seeing this adopted today is separate from the credit score. It's often either pulled at the same time or pulled as a second chance, as we talked about before. But what we've set up and created with Plaid capitalizes on the already streamlined experience that Plaid has today with lenders and consumers directly, and only a few extra connection points through APIs to get to Experian cash flow attributes and cash flow score.
Cool. Michelle?
Yeah, on the consumer side, I mean, I think it really comes down to, Plaid's role in facilitating sharing this data. And so, as customers or lenders identify, yep, I want to start testing this product, I want to look at this, they can integrate directly with Plaid through our own APIs, or they have the opportunity to integrate through our ecosystem of partners, loan origination systems, platforms to actually access this information, depending on what their technology stack looks like today. And then we would go through kind of the thing that Plaid is the most known for is the ability to allow consumers to go through a streamlined flow to share this information. For our Experian partnership, it's specifically through our consumer reporting agency, which allows us to share this data in FCRA compliant manner in order for consumers to actually have this be under a specific permissible purpose and for lenders to be able to actually decision on that data. Something that we are really proud about at Plaid is the relationship that we have built with the consumers itself for that sharing process. We see 1 in 2 consumers have connected an account with Plaid. And that really drives that high converting flow that allows a consumer to share this information. Once that information has been shared, then as Ashley talked about, we have a seamless integration with Experian in order for that information or data to be sent over to Experian, and then they can then send back the attributes and scores that she talked about to the lender.
This does speak to, I think, technical agility more broadly, because if you're looking at integrating this type of data, which every bank should be looking at it, another great example I give is the mortgage business. The intent to buy a home is something that banks don't have, right? Mortgage lenders, brokers don't have that data. But Facebook has it when you joined a real estate group. Apple has it when you downloaded an app and you've been doing property searches. Google has it because you've been doing, searches. So, there does seem to be, moving forward, data is a competitive edge that you're going to bring to different elements of your business, but it also requires a pretty significant technical agility to be able to plug in these different ecosystems. So I think that that's increasingly technical agility and cultural agility of organizations is going to be a real hallmark of those who are able to thrive in this sort of new era of financial services. On that note, let's take a quick break. And we will come back after the break and get into some of the more detailed aspects, particularly around the use cases, how regulation is going to adapt to this and, the future roadmap, particularly around AI. You're listening to Breaking Banks. I'm talking with our friends at Plaid who brought along Experian. We'll be right back after this break. Welcome back to Breaking Banks. This week's episode is brought to you in conjunction with our partners Plaid, and they've brought along their friends at Experian, and we've been talking about cash flow data and its application in open banking and sort of more broadly in credit decisioning and so forth. But Ashley and Michelle, let's just talk a little bit about some of the use cases in terms of cash flow adoption. Where are you seeing sort of the primary adoption areas right now? I know we've talked a little bit about the user experience, but which specific areas and product portfolios is this seeing usefulness in today?
So I'll start by saying that it's a broad spectrum in terms of who's prepared and ready and willing to use cash flow data, but everyone's talking about it. And so that's the main point. Top of mind for all. A lot of adoption in fintech and credit unions are exploring this. Automotive, from a segment perspective, that's a significant focus. I think you're hearing the same too, right, Michelle, on your side?
Yeah, definitely. I think personal lending, I think just with the appetite and the need to really differentiate on the credit side of how do you grant loans, like versus, collateral loans don't necessarily have that like sense of urgency to start. I think we're going to see a lot of personal lenders, credit cards, all of that really start to adopt as first movers, outside of those that have been in the market using it for years, like some of the alternative credit products like earned wage access or cash advanced or buy now, pay later.
Mm-hmm. Yeah. And the use cases, we mentioned the underwriting use case, of course, is prominent, and customer management. So overseeing an existing book of business. And, we've done a lot of analytics on our side, and it's quite surprising and just sort of fascinating to see what can be uncovered in a large portfolio that organizations may not even know. I'll give you just one quick example of an organization that uncovered a significant amount of payday loans within their prime population that they weren't aware of. And so that's just, two great opportunities, one for the consumer mostly, right, to potentially get a better priced loan. So that's one of the use cases, and just sort of interesting to see what you can uncover using open banking technology. And then we're starting to also hear more around the mortgage space. I think, Michelle, too, you've seen that as well, where mortgage organizations are looking to better understand transaction behavior and patterns as they look to sell portfolios and how to price those.
Yeah, I think mortgages is really an interesting space because I think, at times we talk about cash flow as this like broad bucket that's like anything that you can do with a bank account based off of that transaction and how you can use that to underwrite, verify, or really help from a process perspective. I think in mortgage, the places that we've seen is that the ability to get a mortgage, you always have to share bank data in order to verify assets, especially in a purchase transaction. And so that familiarity with consumers in a very high intent product that has a lot of friction already. I mean, I don't, if anybody's been through the process, it probably wasn't the most enjoyable experience. Like they're going through and they need this information. And the thing that we are excited about that we're seeing on really the originator side is that you actually are having access to data. It's all about how you use that and where you get it in the process. So the earlier that a consumer can share this information or borrower can share this information to really apply, the earlier you have access to things that like can assess where is the source of that down payment fund coming from. Was there a large transfer or deposit that they need to look at and evaluate for the underwriting process? Can they actually use income and partner with the GSEs, Fannie and Freddie, to actually use that same bank account to qualify and verify assets and income at the same time? But it really comes down to getting that information as early as possible. And then the mortgage lenders that I think are really on cutting edge on this side are going through the process to actually use that data earlier to drive the workflows downstream and really create process efficiencies and close mortgages even faster.
As you sort of think about the application of this in specific models, even in the mortgage business, when you're talking about all of the data we're trying to collect, we're really trying to approximate cash flow anyway, because we're trying to see whether the consumer can afford to lend. So, so much of that could be simplified, even take friction out of the process. How's this being sold to consumers? Is it sold on the benefit of lower rate, or what percentage of consumers are willing to give up cash flow data, for example, to get access to better loans? Have you guys got data on that?
I'll talk a little bit about what we see from just a consumer comfort perspective. I mean, we've done research, and consumers don't necessarily feel like a credit score itself or a representation of their full and complete financial picture, which really indicates that like there's a desire to share more. And in fact, we did a research study with Datos Insights and saw that 74% of consumers are more comfortable sharing their bank data. And I think as we see adoption and as we see consumers, develop a relationship, and we talked a little bit about the 1 in 2 Americans that have shared their information with Plaid, like their desire is to have this information be a part of that evaluation.
That's such a flex stat, that 1 in 2 Americans. Anyway.
It's so flex, I had to say it twice.
Yeah. Well, I noticed it, right? So anyway, Ashley, in terms of specifics around the consumer willingness, is this a sign of greater sophistication, or is it more just consumers, I think, a little frustrated that the existing data we use to assess, they don't feel it accurately portrays their position?
Yeah, I think the consumers, as they've shared with us, are willing to do that and share the data when they know there's a benefit to them at the end of the day. We've done our own research, which ties very similarly to what Michelle said, of around over 70% are willing to share. But it's important that they know why they're sharing and that there's a benefit to them, and the better interest rates or a better product or service is one of the reasons they're willing to share.
Great. Well, at this point, let's do a quick call out to Stewart Watterson. Stewart is a strategic advisor for Datos Insights. And in November 2024, they did a research piece on this, how the availability of cash flow data addresses two critical industry challenges. This is what Stewart had to say.
The availability of cash flow data addresses two industry issues, challenges that I think will cause just a real ground shift in consumer lending. So the first is creating pathways for the credit underserved consumers, the credit invisible. And this is a number of consumers that, choose your estimate, anywhere between 30 and 90 million consumers across the US that don't really fall under and or work well with legacy scoring models. So they're either new to credit, no credit, bad credit, new to country students, and we all know that there is perfectly good opportunities there within that population, and this expands that opportunity like it's never been expanded before. So it's really a good step forward as far as serving that underserved population. But then on the other side of the coin, it expands consumer lending addressable market significantly, and also improves the ability to manage credit. So the Experian Plaid partnership I see it as kind of like some basic infrastructure that can expand addressable markets and serve consumers better. And that's really a win-win situation. This could be a real sea change for consumers.
Well, I mean, look, we know there are people out there that are good at managing credit risk, because we know the other metrics that align with people who are good with money, and we know that a lot of them have poor credit score or thin credit file, and the only way to get that credit file improved is either they got to earn a lot more money or have a lot more credit history.
Yeah,
and
right.
Neither you can do if you're starting off. So that's that's a core problem. So this is where the behavioral cash flow metrics is actually a better indicator of someone's core financial health and their ability to manage money.
Okay, so Ashley and Michelle, coming back to the space around this, one of the things that one of the reasons for Plaid's existence in the US market in particular is that in this field of open banking, it has been left to sort of commercial aggregators and platforms like Plaid to do this work, instead of seeing mandated open banking as we've seen in the European Union and other parts of the world. But in terms of the regulatory response to this, is there any regulatory guidance right now in respect to how regulators see, sharing of cash flow data? I do know that, when we're talking many, many years ago now, but in the early PFM days when we're starting to, allow people to share their data on platforms like Plaid, it became an issue of some contention because banks thought they owned the data and so forth. But we're talking about consumers' own data here. That's been clearly established. But what other regulatory concerns come into this space?
Yeah. I mean, I'd love to just touch a bit on kind of the evolution of open banking. Like, I think that's super important.
Sure, that'd be great.
Love Ashley's perspective on other regulations from a credit perspective, but I think like that point is so key that like internationally, open banking's been around a while. Like those stats that you talked about, as you talked about things like new banks doing, like that is powered by the fact that other markets are much more advanced in this space. I think there's been a lot of regulatory kind of evolution of open banking in general, with the Rule 1033. I think the verdict's still out on where that's going to land. But like, my firm belief is open banking's here to stay. And as you talked about, as it moved into the US and it started in a world where it was just getting up and running, we're so much more advanced in the space of this information being shared securely. It's powered mostly by APIs that actually share this information and allow a consumer to grant access to a platform like Plaid, and then also have us securely actually access that information through the financial institution. And so despite the regulatory environment around open banking, like our strong view is that like it is here to stay. And all of the stuff that we talked about in terms of how do you use cash flow data, it can't happen without the ability for like scaled access to that data, which Plaid is a very a core part of.
I'll be clear in respect to this. My role in the industry is largely as a futurist, looking at future-proofing the sector, being able to talk about the changes that will be happening in 5 and 10 years from now, and putting in context that. But the reason I say that is because you cannot have AI-based banking without open data. I mean, the two are absolutely correlated. So if you want to have a modern, autonomous, banking system or highly autonomous banking system, using AI to really increase, the effectiveness of the system, you're going to have open data. That's my position anyway. And I think most of the regulators probably, agree with this. But there is, of course, GDPR concerns and other things like this. More broadly, there is data restrictions. Ashley, you guys have to deal with that all the time with credit scoring. Who is the primary regulator that you guys generally, feel you're working with, or who regulates your part of the sector?
Yeah, well, yeah, you're so right. We are one of the most heavily regulated industries for good reason. And so we're very well versed and experienced in this. We've operated in this highly regulated environment for many, many years, working with federal and state administrations on, FCRA obligations, et cetera. So we're very familiar here. We have several practices in place, compliance, rules, governance, et cetera, to make sure that our business is meeting expectations around privacy and security. And we're well equipped going forward, whatever those future regulations may be. As Michelle mentioned, 1033 is up in the air right now, but either way, we're very well equipped to handle what's to come. I'll say too, because we all sort of watch 1033 unfolds back up and do different things in that way. And what's been interesting is that while that's evolved, let's say, the lenders that we work with are still so focused on this data regardless of the regulation, because they do know and they've seen the results that it does have predictive power and it does drive greater financial inclusion. So I think as while regulations are so important to the industry, even if 1033 takes a longer time to come to fruition, it's not going to change how the industry responds.
For our listeners who are outside of the United States, do one of you want to quickly explain what 1033 is?
Yeah, yeah. I'm happy to. Although, like, I will say, I'm a product person, so there are people that are the experts in this space at Plaid.
Yes.
And I think we've got a ton of content out there. So check us out if you want to go deeper. But it is really the regulation that sets the framework for how open banking data is shared. What type of data can be shared? What can be used with that data? And how the actions of those that are actually facilitating sharing that information, what are the criteria, what kind of data can be shared. And so it really kind of sets the framework for open banking in the US. So we can catch up to other international areas that, again, have more advanced spaces here.
Nicely covered. All right, so let's do a bit of future gazing. Let's talk about where do you see this in a few years' time? In terms of sort of the way cash flow data is sort of built into the system. Do you see it as table stakes? Do you see that it's going to take a fairly significant amount of time to get adoption, like credit scoring did in the early days, or do you think it's going to happen quicker?
So I think my prediction, especially with collaboration between companies like Experian or Plaid, are going to accelerate adoption much faster. And a few reasons why. One is that we can demonstrate with real data, real performance data, the impact that this has to risk, to financial inclusion, and more. And that is so key to anyone starting to use any data set, is prove it. Prove to me that it works and how it can help me in my growth objectives for my business and also help my customer. And so I think the combination of us together helps to drive that adoption much faster, to prove why you need to use this data.
All right, but let's talk about agentic AI, right? Because in 5 years, I could see agentic AI being a big part of lending decisioning and automating this sort of data. Like, I can imagine my personal AI saying to me, "I think I can get you a better loan if you're prepared to release your cash flow data. Would you like me to proceed with that?" Right? I could see that as being a sort of a natural use case. But how are you guys preparing or looking at leveraging AI in relation to this specific data set and feature?
Yeah. I'm happy to start on my side. I think, like, that scenario just planned, like, one, that data has to be facilitated being shared, and that data needs to be shared in a safe manner. So in order to, like, show that reality, like, there still needs to be that safety and soundness around a consumer having the ability to share that information, and really the trust behind the provider that's helping facilitate that, which I think is so important from a pod perspective in our role there. But 100%, I think today, the way that consumers manage their money is so different, but really a lot of the decision becomes around what the consumer wants to do. How do I want to spend? When do I think I need to go get a loan? What are my financial goals? Like, I think the place where, like, the agentic AI gets so exciting is it really allows everybody to have an advanced sophistication of how they view money and how they manage their money. What if a world happens that instead of me going to look at a marketplace, the marketplace comes to me because the agentic AI has gone out and actually found those options for me? I think that's a place where, like, the evolution of cash flow data in general and the trends that we're seeing today, they're going to dramatically change with the opening up of AI and different tools that's going to do that. I think, like, that's also where the power of it is because the fact that cash flow data is real time and can dynamically change with those trends, versus I do think on the credit side, it's going to be, has that lagging factor that I don't, this isn't really new established kind of source to be able to keep up with that innovation.
Yeah, I can imagine my personal AI telling me I've gone out, in like the space of 180 milliseconds. It comes back and says, "I've gone out and reviewed 3,000 lenders, and I think I can get you a 1 point. I can get 120 basis points better off if I share your cash flow data." I could imagine that that being a real case. What about Ashley? What are you guys doing to prepare for agentic AI and its inclusion in your system?
We've been innovating with AI for nearly 2 decades, so it's definitely not new to us, and it's baked into virtually all of our products. In fact, we recently announced Experian Assistant, which is a virtual real-time assistant, and it's built on agentic AI framework, and it allows businesses to interact with financial data in a very easy, not complex way, makes analytics much more accessible. So we've started to promote that more and help customers derive insights faster and make better business decisions. So, having said that, though, with regards to cash flow, I do think it's really early days. And what we're seeing is organizations want to get their hands on this data first themselves before they start fully automating and empowering decisions to be made on their behalf. And so that's where we come in and are critical to the process to help them access the data, derive insights from it, and then use it within decision-making processes.
So you guys have heard of KYC. Have you heard of KYA? Know your agent? Here's my question to finish the show on. And it's a question for you, Ashley. When are agents going to have to get credit scores? I'll leave that thought.
Is that the next model that we're going to have to build?
Look, I think so. You're going to have to assess the risk of specific agents, maybe agent platforms. Look, that's $1 billion business idea for Experian. I just handed you on a platter, but I'll leave it at there. All right, so let's wrap up, guys. We've got to wrap up. We're running out of time. It's been a really great conversation, but where can lenders find out more about this partnership, about what you guys are doing and maybe access the program?
Yeah. They're welcome to find us at plaid.com/Experian or reach out to Experian at plaid.com.
Fantastic. And before we go, how do people follow you guys personally? Do you have like a social media platform you use, LinkedIn or whatever, where we can find out a bit more about what's happening in your space?
Yes, absolutely. You can find me right on LinkedIn.
Yeah, same
Great.
here.
Fantastic. All right. So Ashley Knight and Michelle Young, thanks for joining us at Breaking Banks this week. And it was a really interesting conversation, and all the best with changing the world of open banking data.
Thank you.
Thanks, Brett.
Great. That's it for Breaking Banks this week. Thanks for joining us again. A shout out to our production team at Provoke Media that helps us, Elizabeth Severance, our producer, Kevin Hersham, our editor, and the entire team that works on the show. And thank you to you guys for making us the #1 global fintech podcast on the planet. After 12 and a half years, it's a well-earned distinction, but we appreciate your support. As we always say, make sure you join us next week on Breaking Banks. We'll be getting more into what's happening in the sector, what's happening in fintech, and how we're changing the world of finance. That's Breaking Banks for this week. We'll see you guys next week.